You are listening to chartingwealth.com for Tuesday, the 30th of October, 2018. We see everything down for the day. We'll start with the S&P 500 as represented by SPY. We see that it is down 0.58% for the day, and the first candle forming for the week, and again, this is a 5-day candle. This is just the first day of a 5-day candle, is a pretty strong down candle forming. We have 4 in a row forming up right now. We see the derivative oscillator continuing to gain downward momentum. Price percent oscillator heading down. It's just a perfect crossover, folks. We go all the way back to the week ending the 12th of October when that occurred, and we can see the derivative oscillator flipped over from red to green, and the price percent oscillator crossed the red signal line. It doesn't get any better than that, and we have 4 candles on the same trend line. So again, if you've not gotten into this on a practice trade, you are missing great experience. Let's go from the weekly to the 2-day. And we see that things are continuing to trundle down. The latest 2-day candle bigger than the last 2 2-day candles. Derivative oscillator still losing some downward momentum, but that price percent oscillator spiked over down. And we go to the 4-hour chart. What do we see there? Well, remember the 4-hour chart crossed over going down again back on the morning of the 23rd. That was Tuesday, 23rd of October. And then again, slid sideways for a day, down for a day, sideways half a day, down half a day, sideways a day, and then, of course, down for the afternoon today, really strongly, and recovered some of that. So look, continue to pay attention. Derivative oscillator is staying negative, but it's getting awfully close to crossing over. Price percent oscillator spiked down a little in the afternoon. So watch. Continue to watch. You've done very well. Somewhere, from the range of about 273 to, of course, a low all the way down to 259. That is just beautiful. So again, what do we talk about? Now, those of you who are new and we're saying, hey, you can make money when stocks go down in your practice trades. What is that about? Well, we are talking about an inverse fund such as SH, which of course is the ProShares short of the S&P, which means it goes up while the S&P goes down. And that's, of course, what we bought in our virtual trade. So it, of course, has gone somewhere in the neighborhood of a jumping in point of, say, $29 or so, up to 29, up to 30.49, something like that. So again, that is a much smaller number than that 273 or so on the S&P 500 itself. But again, percentages should remain the same. That's what they strive to do in those inverse funds. So let's go now to the Qs. That's the NASDAQ 100. We'll start off on that weekly chart. What do we see again? 4 strong down candles. Derivative oscillator gaining downward momentum. Price percent oscillator continuing to slam down. Starting the week off with a big down candle. And again, just the first day, so there's a caution there. What do we see on that 2-day chart that did finish drawing that last 2-day candle? Huge down candle, spiking the price percent oscillator down, derivative oscillator gaining downward momentum. That's good to see. Then we go to that 4-hour chart. What do we see? Well, of course, it had rolled back and then rolled back over. One thing we wanted you to learn is when you see a chart fake you out and start to move over and then bounce right back up and then bounce again, chances are on that second bounce, it's going to stay in the direction that it originally had bounced to when it goes back to it, which it has, of course. So we had a crossover, a jumping in point somewhere around, and again, we're using the Heikin Ashi candlestick, so it was somewhere around 170, and of course, the low that we've hit throughout the course of the day from 170 to 160.09, $10 in just, 4 days? So again, that is wonderful in an inverse trade. And of course, on the Qs, the inverse for just a simple inverse, PSQ is the ProShares short. And we see in PSQ, of course, when it crossed over, it's going up. So Again, and again, a much smaller number that we have there, but again, about the same percentage as what we're seeing on the NASDAQ 100. So important for you to pay attention to. We see, of course, a big slam down in the afternoon after a bit of an up morning. Heiken Ashi candlesticks, price percent oscillator heading down, derivative oscillator gaining downward momentum. So again, markets are not doing well, but remember, that doesn't concern us. What concerns us is reading the charts and knowing which direction to be in a practice trade on. And we're going to have for you at the end of today's training, we'll have a link to the daily market worksheet, the training on how to actually use it, which you ought to be using every single day. Now let's go to bonds, TLT 20-year bonds. What are they doing? Well, looking at the weekly chart, they've been sliding sideways, tending up, and so far we have a green spinning top. Again, means all things being equal, the green spinning top means indecision, tending up. We can see that in the derivative oscillator. Price percent oscillator is almost gone flat, still heading down a little bit. That 2-day chart, we did have a crossover, so we've drawn a new trend line, which is, of course, going to be bisecting the down line on the weekly. Means we don't have a trade on TLT. Why is that? Well, of course, because of the pullback. And we have to have the 2-day and the weekly moving in the same direction before we can even think about a trade. What's going on that 4-hour chart? Well, of course, it crossed over back in the morning on Tuesday the 23rd after a huge up morning. Slid sideways for a little while, but tending up. Derivative oscillator losing some momentum, but that price percent oscillator still, well, pretty flat, heading up just a little bit. So don't have a trade until the 2-day and the weekly are moving in the same direction. We'll just continue to monitor and see what happens. Lastly, we go to bonds. Bonds down for the day. We go from bonds to gold. Gold down for the day, also 0.40%. Now, we have a weekly trend that is up in gold. We see the derivative oscillator gaining upward momentum, price percent oscillator heading up. We have a bit of a down week starting off, pushing through the otherwise nice looking trend line. We have an open red box candle. Now again, that's not a strong, solid red down candle, but it does give us some caution. However, our indicators continue to show strong up movement. Let's dig a little deeper. We go to the 2-day chart. What do we see there? Well, we have 3 connected candles heading up. Green, derivative oscillators losing some momentum, price percent oscillator losing a little bit of momentum, but again, we still have the 2-day and the weekly in confirmed up moves. Now let's look at that 4-hour chart. It just has not had enough momentum, has it, to cross over going up and giving us an up point. It tried its best. Derivative oscillator flipped over on the 26th in the morning and the afternoon. That was on Friday, but just not enough energy to cross over. Down in the morning, down in the afternoon, sitting right on that 2-day trend line. Let's just see what happens. Again, things are poised. If we'll just have enough up movement in gold on that 4-hour chart to cross over, we'll have a jumping in point, but we don't push it. Remember, the market leads us. We are trend followers. Some great training here at the end of the program today. We got a great training for you on crossovers, also on how it works, like how our entire trading method really is. Take that one, how it really works and what our theories are, and also that daily market worksheet as we promised you, and also buy our book if you want to support us here at the channel. Thank us for all our work. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.